Hi, my name's Chris Bruce. I'm the Managing Director of Thomsons and the co-founder. I spend the majority of my time on aeroplanes visiting our clients around the world. In fact, in the last 12 months, I've been to 79 different cities in 19 different countries. I've actually flown the equivalent of to the moon and back again. And what I want to do is to share with you some of the trends that I'm picking up from spending time with our clients around the world. First of all, if I look at the US, 25 years ago in the US, typically companies had a different HR system, a different payroll system, a different benefit system for each state. What's happened over the last 25 years is that they've consolidated, so they typically have one HR solution, one payroll solution, and one benefit platform for the whole of the US. And with the advent of the cloud, what they're now looking at is how they can do exactly the same thing that they've done in the US globally. So they look at the world as being one big bunch of states. Then if we move east and we head across to Asia, we see huge amounts of different trends. It's very difficult to try and put Asia into one big bucket. But what I have got a real sense of is that our clients in Asia will typically say that they've not been affected in the same way that the West has been affected by the global recession. So as a consequence, they've had to continue to engage their employees and to be really innovative around how they recruit and retain people. So let's head west again and back to Europe. Europe has been at the epicenter of the financial crisis over the last 6 years. And as a consequence, there's been a lot of talent lost, and companies really haven't focused that much on how they differentiate themselves from an employment brand perspective. But over the last 18 months to 2 years, we've seen certain countries starting to pull out of the recession, and with that, they've seen rising inflation. And that's put pressure on wages and seen wages increase. So companies have got two things to try and grapple with. First of all, they're recruiting within a talent pool which is getting smaller. And second of all, they're having to retain the talent that has maybe stayed with them because the opportunities haven't been there within the rest of the job market. They're having to be more innovative about how they package themselves up and differentiate themselves. And we're seeing a growth of flexible benefits across some of these European countries. We're also seeing a lot of the European countries starting to think a bit more American. So they're starting to be more centralized in the way that they run their global operations. And if there's one trend that I'm seeing from all around the world, it's companies talking about how to tackle the increasing cost of medical provision. Typically, it's somewhere between 10 and 20% of an increase each year, with certain countries seeing much higher medical inflation. So how are companies tackling it? Well, we're seeing a lot of companies moving from defined benefit medical arrangements to defined contribution arrangements, often taking some of the innovations that are happening in Asia and happening in the US market and actually implementing those innovations in other parts of the world. We expect to see more of this happening over the next couple of years.